Welcome everyone to Trading Arches with Archie. This is the channel where we're going to go over technical analysis of different stocks and securities and different trading strategies. This is my first video. We're going to talk about my initial trading strategy and what I like to do, and also basically the title of this channel, which is Arches, Trading Arches. For starters, I'm not a financial advisor, so do your own DD, do your own research, and to follow up and see if these trading strategies are for you. For starters here, I want to go into this first chart, which is going to be X, or US Steel. Let me get rid of these old bars here. Okay, so we are I use Webull. This is my favorite brokerage at this moment. I've used pretty much all of them, I think, at this point. Fidelity, TD Ameritrade. I used Robinhood early on. Don't go to Robinhood, please, whatever you do. But I've even used just my my bank for a brokerage. And yes, that works if you're just making like really long trades, but it's not a good idea if you're planning on doing any sort of swing trading or day trading or more rapid trades. All right, so my setup here is using a bunch of Fibonacci numbers for my exponential moving averages. 144 EMA, 34, 21, 8, and the 3. Those are the exponential moving averages that I like to use. And they give me, basically the 144 gives me a really broad, slow trend. And then all the other ones are more of the confirmation for the 34 and the 17, or the 34 and the 21 are my confirmation trends. And then the 3 and the 8 are my microscopic trends that dial me in for my actual trades. Okay, so for starters, what we want to look at is all of these EMAs have to be above the 144. Okay, once they cross above, that is the first time that I'll start to look at that stock. Okay, and once I'm looking at it, I want to see the 3 EMA cross above the 8, like it does right here, and then I'll see it gap up, make a nice little arch, pull back, and touch. But this one actually crosses below. So we're going to keep going and keep following this stock until we get our perfect little setup. And that little setup is this beautiful arch right here. We have the 3 below, crosses above the 8, makes a nice little arch, pulls back, touches, does not cross below the 8 EMA. That is crucial. It has to stay above. And then we'll see buyers stepping in to create the second arch. And once you have these buyers stepping in, this is where I will make that trade. Generally speaking, I make this trade within the first hour of that trading day of regular market hours. That's when you have the largest influx of volume and the most trades possible to give you kind of a bigger buffer. So once I make this trade here, I'll go ahead and drop down a stop loss at the same time. And what I want to make sure is with this stop loss, it needs to be just below the previous day's low. And what this does is it creates a very close, very tight, low risk entry point. And that's what we want in our trades. We want to be consistent in our trades. We want to make consistent money, and in order to do that, you have to have close stop losses that don't get too far away and don't allow you to get into too much risk. So once we made this trade, we're going to follow that trade upwards on this trend. Okay, and so every green day, we are gonna, once a green day closes out, we're going to move up our stop loss. Now, if we have a red day or a consolidation flat day, I'm not going to touch that stop loss. Okay, so what we have our day that we made our trade. We have the following day is a very large green day. Now we're going to move our stop loss. It's not a huge move, but we're moving it up just below the previous day's low. Okay, now this day you have this high spike, and then we have this pullback, and it's basically a flat day in the end. I'm not going to touch my stop loss. Then we have a red day, another consolidation day, and then we have our next green day. Okay, that's when I finally move up my stop loss after this day closes to just below the previous day's low. And I'm gonna generally still include pre-market and after hours trading highs and lows in my stop losses because you still don't have a whole lot of control over that. There's less volume, but you don't want to have some weird spike out of nowhere, some sort of flash loss, and then you lose all your profits. And we don't like that. We want to keep our consistent profits. So we've moved it up. Then you have another green day. We're going to move it up again to that previous day's low, which is right about there. And then we have a red day followed by a green day. This is a very green day. Now, this is an example of what I am actually not moving my stop loss too high. So the previous day's low was actually also above that day's low. This is I won't actually move it all the way up to here because the following day here could easily drop down to this point, as it does. But what I do like to do is I'll move it up from this point, but the 34 EMA is a pretty good point to drop that stop loss. It's a continuation of the trend, but you can also bring it all the way up into here. But you will get stopped out the next day no matter what it looks like, unless you left your stop loss here, and then that's probably too much risk. But you'll notice this is where we took that trade way back in here, and we get stopped out all the way up here. What are we looking at? 940, and the purchase was all the way down here. Let's just throw it right in the middle at 847. So that was almost a dollar increase in that trade. Okay, that's good consistent profits. I want to be making trades. Generally speaking, I try to start taking profits around $50 profit per trade. Now that doesn't mean I close out that whole position, but I like to get that $50 profit, secure it in, and then I'm good to go, and I'll just let the rest ride. Now that stop loss is important. If it drops too far down, then I'll obviously let the stop loss do its thing and get you out of the trade. So let me go over one more option, or one more ticker here. Let's go to Blumenberg. And this stock here has a beautiful trend. Look at this. Look at this. How many days is that? That's over like 20 days, 30 days, 40 days. Just a nice, beautiful trend, gradually moving upwards. All right. So let's apply this strategy one more time. We want to see all these EMAs crossing up above, which they do right here, and then we follow it. We want to see the 3 cross above the 8, so we'll come in right here. This is where the 3 crosses above the 8. And here we have first arch. We have consolidation, touch, not going below like you had back over here. We have touch, we have buyer stepping in, and we purchase on this first hour, right around in here. And then we're just going to follow that trade up. But let's make sure we set our stop loss, like always, just a little below the previous day's low, and you can just follow it up. You have a green day, but the low is below this day's low, so we're just going to use that day's low. All right, consolidation day, green day, move that stop loss up. Green day, move that stop loss up. And that's all we're doing. That's the trade. It's pretty simple. We want low risk entries, so that 3 EMA has to cross above the 8 EMA. All the EMAs have to be above the 144. The 3 has to pull back to the 8, touch it, consolidate just for a moment, and then you have buyers stepping in, and that's when we make that trade. Anyways, that's the basis of my trading. That's where I started. Give me a like if you like it. Hit a subscribe if you want to subscribe to my videos and see more like this. And drop a comment. Let me know what you thought. This is my first video. Just getting started here on YouTube, and I'll come out with a bunch of different other strategies, and I'll talk about other stocks. Particularly, the following video is going to be an AMC video. And anyways, thanks for joining me. Have a good one.